So joining us is senior economist at KPMG, Muziwethu Matema, and we also have via Skype Statistician General Dr. Padi Lehotla. Dr. Lehotla, thanks so much for joining us. Of course, a huge relief with the GDP figures coming in at 3.3%. Was this to be expected? Because we had other forecasts that suggested that we'll only make a growth of 0% this year.
Well, I think we at say have no taste buds whether there's a relief or not. I think our methods are solid in terms of measurement. And that's where the country, that's what the country should have, that we hold the conduit of trust. What we saw is that there has been manufacturing came very strongly and mining came strongly. But we also, in our presentation of the results, worked on year and 6 months on 6 months. And when you look at these numbers year on year, well, the growth is 0.6 and the 6 months on 6 months is 0.3, which is not the 3.3% that we see. And we did that so that we can show the effects of the base effects, that the base was very low. But what is crucial also is that it is in the real economy that we are seeing growth, mining and manufacturing.
While you're there in China with the G20 meeting, is this the kind of information that you would gloat about and put forward to future investors?
No, I'm not with the G20. We are meeting as statisticians looking at the first UN World Data Forum preparatory meetings, which will be held in South Africa in January. So that's what we are discussing as statisticians. Bean counters are not with the financials. But obviously, I think the country was a bit at tenterhooks around whether there'll be a recession or not. And I suppose if I were to occupy the citizen space, it's a relief. But if I'm a statistician, I only get relief if the methods are good. And that's what one will talk about, that the methods that we apply are solid, and that's what I can gloat about.
Yes, we have a senior economist from KPMG, Muziwethu Matema. Muzi, just in terms of how this reflects, particularly with the whole saga around future growth and the financial stability of state-owned entities, what does this mean when the economy is performing this way, particularly when it comes to the government revenue intake?
Thank you, Cindy, and good evening to your viewers, and good evening to the statistician in general. Basically, the figures that came through this morning, the 3.3%, you can view it as a measurement of acceleration between the last 2 quarters. The statistician general is right in pointing out that when you look at the performance of the economy in the first 6 months of the year, it's only 0.3%, which shows that we're still in a very low growth phase of the economy. Even if you look at the economy year, the GDP growth year on year only growing at 0.6%. However, just to be positive, the 3.3% is the fastest acceleration that the economy has grown by since 2014 Q4. And in fact, since then, this is the only data point that has been around 2 percentage points quarter on quarter. But to get to your question on government revenues, when we further distill the data in terms of GDP on expenditure, we notice that there's a lot of weakness in household expenditure growth, a lot of weakness in gross fixed capital formation, which is a measurement of investment, and negative growth in imports. That means those are figures that government tax revenues heavily rely on, but that those figures heavily drive government tax revenues. That means we will get weaker import revenues in the fiscus, weaker VAT collections, and weaker investment also indicates to weakening corporate income tax revenues. That means government will be under a lot of pressure to meet its fiscal targets. Now, what does that mean to the man on the street, most importantly? If government cannot meet its tax revenue targets, that means their expenditure obligations will be greatly challenged. At the same time, in the private sector, if the economy continues to grow this weekly, that means the private sector cannot generate the jobs that we require in this economy. That means there'll be a lot of pressure in terms of household incomes.
Okay, but Dr. Lehotla, with this current trajectory, is it sustainable?
Well, I think the point is really that for the first time we have this kind of growth, particularly in this 3.3%, although albeit from a low base, and also from the real economy, which is manufacturing and mining. And we see a growth in exports, and I think that shows that perhaps the markets are beginning to have appetite for exports from a subdued position that they had in the 2015 area. And if exports increase and there's demand, then there will be more production. And therefore, it may well be that the future is one where the economy may grow. But it's too early days at this stage to talk about that. But I think a note must be taken of things happening in the real economy. A drought, of course, in agriculture has been the main culprit, decimating that primary sector as well, or rather agriculture. Perhaps if the rains and the clouds start accumulating, there might be something in the future. So it's difficult to say what the future might look like. And of course, I'm not supposed to talk about that because I measure what has happened. But given the three sectors, agriculture, mining and manufacturing, less agriculture in terms of drought, perhaps there is better hope going forward.
Yeah, Mozi, you were saying about concerns, basically, from a household point of view, where it is about food security, keeping the lights on, being able to function on a day-to-day basis, that these figures translate in a sense of things we're turning the tide, at least, avoiding a junk status, possibly avoiding a technical recession.
Yes. So we have avoided a technical recession. Basically, a technical recession refers to whenever 2 data points of deceleration. So if we had gone negative this quarter, that would have measured as a technical recession. So fortunately, we accelerated ourselves out of that on the back of strong mining growth. Just to speak on how mining growth filters through to manufacturing growth, because of linkages between mining and manufacturing. When we've got a boom in the mining sector, we see a very strong growth in manufacturing, and manufacturing is the second largest sector. So that growth in mining filtered through to very heavy contribution to our growth from the manufacturing sector.
And what about the dependency, of course, on the export market, especially when it comes to raw material? If China is not necessarily, buying raw material and maybe other export partners, that impacts on local production.
Yes. Whilst for this data point we had very strong exports, at KPMG our main concern is that globally the conditions that still permit low growth still persist. That means we're still seeing slower than expected demand from our traditional export partners in China and whatnot. So in terms of this data point being the quarter-on-quarter growth, we might have had some acceleration. But if we look at the aggregate figure for the whole year, we are still performing below 1% GDP growth, which is still a great cause of concern.
Yeah. And Dr. Lehodla, is this an indication of the volume sold, or is it rather just the output that has been measured here to reflect the GDP numbers?
Well, the two are quite related. I mean, there is an issue if you look at the expenditure side. There is a decline, a very sharp decline in inventories. And inventories are accumulated stocks prior the quarter that we are in. And when that declines, it may be industries are selling what they had accumulated. So when you look at the expenditure side and exports, it might be that that is what has caused a sharp increase in exports. Of course, we see both in the production side as well that manufacturing has increased as well as mining. So it's both output as well as the revenue streams that emerged from the sales of the goods that were exported.
Yeah, and was it just the volatility of the rand? We also heard some calls saying perhaps we need to buffer, or rather, cushion the volatility of the rand, because it does impact on production costs, overheads, and exports as well. Can we attribute the good performance of the rand also to the figures that we see today?
South Africa, being a very small and open economy, has a very emotional currency. So occasionally we do get short-term volatility, quick volatility in the rand. So today the rand did respond positively to the GDP data. Negative news comes up tomorrow, the rand will go the direction of that. Positive news comes up the next day, the rand will follow suit. But I think as well for exporters, an important measurement of exchange rate is the real effective exchange rate, which measures the competitiveness of our exports to a basket of other exports. That seems to be the more determining factor in the long run for exporters, instead of short-term daily changes in the exchange rate.
Yeah, and Dr. Lehotla, just in closing, is this a good news story to tell?
Pardon? I didn't get you a message.
I'm saying, is this a good news story to tell, or should we hold on to the champagne bottles, or popping those for now?
No. I think you should pop up the champagne for the good story of South African statistics South Africa being a producer of quality statistics. That's what you should pop up the champagne for. That's the only good story I know. The rest I do not understand. I'm agnostic to these things, yes.
True to form, indeed. Thanks so much, Dr. Padile Hotla, coming to us live from China, attending a statistician conference there. And Muzi Matema is a senior economist with KPMG. Thanks for your time.